Is Facebook's almost $400 stock price a good buy right now? Hey guys, welcome to Curious Pejjy, and I'm curious. I'm curious that Facebook's nearly $400 stock price is a good time or a good price to start a position for the next 5-10 years and onwards. As usual, after spending a lot of hours researching and putting this prediction together, I made a very easy to read and understandable Excel spreadsheet which predicts the stock every year up until the year 2030. And honestly, I was surprised. But the good surprised. You'll see in a bit. Now, before we get into it, as usual, there are a few disclaimers that you should know. Am I a financial advisor? No. Can you rely on this video in making the choice of buying Facebook stock or not? I would say definitely yes, because all data, all information, all facts is coming from solid data. So nothing came out of nowhere, or as usual, nothing came right up my ass. Can you guys use this video as research towards Facebook? Of course you guys can. A lot of hours have been put into the research of Facebook, so I'm pretty sure you guys will find some interesting stuff. Now, do I own any Facebook shares? Well, at the moment, I do not, but after making this video, I'm kind of considering it because it's pretty solid. Should you smash the like button? I would definitely appreciate if you guys did smash the like button. And if you guys subscribe, will there be more videos like this? Of course, man, hell yeah, I love talking about the stock market. I've been doing this for about 8 years straight. I love it. So if you guys want to see more of these predictions on the company that you guys want, just comment down below. So we all know Facebook, the dead social media platform that we barely use nowadays, right? Wrong. And we will get into that why in just a bit. Facebook is more than just Facebook. They own a few of the best social media platforms in the entire world. And yes, I'm talking about WhatsApp and Instagram. They own other big companies too, like Oculus VR, if I said that right, LiveRail, Threadsy, Calm, and about 87 other companies that I have never heard of, but I'm not gonna get into those companies because I mean, this video will be like a day long, so we're not gonna do that. But the link of the other 87 companies are in the description below, so you guys can go ahead and check it out if you guys are really interested. Guys, Facebook is a very big company. It's the 6th biggest company in the world to be exact. But going back to the claim that I made earlier that Facebook is dead, and Instagram is dead as well. I mean, I'm sure we all know that. They may be dead in terms of people posting and sharing things on their story about their lives, events in their life. I mean, I don't post anything on Facebook or Instagram anymore, but I do view it a lot, and I'm sure you guys do too. What I'm trying to say is that although they may seem dead, they're not. Facebook said that they generated a record revenue and profits recently from Facebook platform. And as an investor, that's really good news to me. I mean, if there's one company that benefited very nicely and greatly from this pandemic, it's Facebook. Everybody and everyone was forced to stay inside in all of 2020 pretty much and a bit of 2021, which resulted in people being online more. Lockdown after lockdown after lockdown, people just got used to staying home, and really the internet was the life savior. All malls, all retail stores, anything deemed non-essential had to shut down. And we all know that Facebook, the company Facebook, is a social media advertising giant. So what happened? Online shopping came into full force. That's why we saw surges in all tech stocks. Companies like Amazon, Snapchat, Zoom, Microsoft, Netflix, Facebook, and of course, Facebook's best friend, Shopify. I mean, we all knew even before this whole pandemic in 2019, 2018, that retail stores was on a decline and sales and attention was going towards online shopping. But the pandemic has taken this concept 5 to 10 years in the future within a year. Like, that's just crazy. So 2020 was a huge shift for every business on the planet. If they couldn't shift, they would have easily gone out of business unless they had a huge sum of cash sitting there so they can pay the monthly rent or the monthly expenses until this thing blew over. But still, even now, things aren't the same. But going back to Facebook, as you guys all know, Shopify, they use Facebook ads a lot. I think that's the most advertisement tool that they use to gather their customers, to make some sales. I'm mainly talking about dropshippers here, and there's a lot of dropshippers that do use Facebook ads on the primary, daily, every minute. I mean, that's their bread and butter pretty much. Knowing that, it's very safe to say that Facebook did enjoy them gains from Shopify dropshippers, because the amount of advertisements that they did on Facebook was absolutely berserk. About 101% berserk. I mean, that's insane, but not too surprising. Them gains though. But that's what has happened. Now the pandemic is slowly coming to an end. What's next for Facebook? Well, let me present to you the metaverse. What's the metaverse? Metaverse, a term first coined in science fiction, is a combination of prefix meta, meaning beyond, and universe. It refers to shared virtual worlds where land, buildings, avatars, and even names can be bought and sold, often using cryptocurrency. Guys, I really do believe cryptocurrency is the future. I'll make a whole video about that later, but cryptocurrency, I don't care what anybody says, cryptocurrency is the future. But going back to Facebook, in the coming years, I expect people will transition from seeing us primarily as a social media company to seeing us as a metaverse company. He also added that in many ways, the metaverse is the ultimate expression of social technology. So I'm getting cyberpunk feeling from here. I don't know about you guys, but science fiction indeed. I really don't know how this is all gonna work. But what I and you wanna know is, can we make money? Can Facebook make money from this? And as investors, that's all what we really care about. According to Mark Zuckerberg himself, he does, or at least he thinks he does. Mr. Zuckerberg says that part of the revenue and profit stream will be coming from selling their VR headsets, or the hardware as cheap as possible so they can get into many customers as fast as possible. He then goes on to say that the main revenue and profit stream will be coming from the commerce and ads within the metaverse itself, mainly from selling virtual goods. Okay, so I kind of see what he's getting there. It's kind of like when you guys play Call of Duty or Fortnite, you buy them skins, when you buy them new camouflage suit, whatever it is, those are all virtual goods, and I'm not gonna lie, it's big business. When you look at Minecraft, when you look at Fortnite, Roblox, man, the amount of profit and sales these guys are generating is absolutely insane. This also refers to NFTs, which is up and coming, and people are making millions off of it already. It's just insane what's happening right now. But this is very big business, very big business if Facebook can get this metaverse up and running nice and smoothly. And if that happens, the prediction we have today is the bare minimum. And if that's the case, then going all in would probably be a smart choice. But in today's prediction, let's not add the metaverse. Let's just go on what we have. So that way we don't keep our hopes too high and we don't fly over the moon and then crash, you know what I mean? So yeah, let's see if we can go all in without the metaverse idea. So yeah, let's get down to the prediction. So in 2020, the peak price of Facebook just hit almost $300. And the current price right now is around $380, which is honestly almost a $100 increase. I mean, that's just insane. But in 2020, the total revenue of Facebook was about 86 billion and the net income was 29 billion with a shares outstanding of almost 3 billion. Earnings per share was over $10 with a forward PE of being 29, making the Facebook price at an average of about 283 with a market cap almost at $900 billion. Quite impressive numbers, and if we look at the chart, it's on a very, very nice increase. Now, let's see what the prediction has in store for us. As usual, I got my prediction through Simply Wall Street. Amazing site. They're the most accurate in my opinion. So I used their numbers, their predictions into this formula. Unfortunately, they only had up until 2023 in the prediction. I mean, obviously you can't really predict that long for a company. I mean, anything could happen. The world changed in 2020. A lot of companies that had great predictions from 2020 to 2021 and onwards, they're all bankrupt. I mean, some of them are bankrupt. The world just changed within literally a month or so. So it's really hard to really predict that far, but that's why we have this video, so we can get an idea of what the price will be in 2030. Now, in 2021, I took their 2021 to 2023 profits and revenue and I plugged it into the formula. Taking a look at it first glance, it does look good. It is on an increase, and this is very good news because we can assume from 2024 and onward, it's going to keep the trend as well, and they're going to keep growing. So let's keep going and keep digging deeper, and let's find the shares outstanding because that's very important. Now, if we look at the shares outstanding from 2017 and onwards, we can see that they're buying back more shares than often selling them, which is good news because it does guarantee our return as investors. But in my opinion, how I see this is that they have too much cash, and so they just buy their own stock. I mean, they could use that money to invest in other things and grow even stronger. But nonetheless, it does guarantee a return. So what I wanted to know is that from 2017 up until the recent quarter, I wanted to know what the average percentage of buybacks were, or sellbacks, whatever it was, for Facebook shares outstanding. And what we got here is that for quarterly, we got about just 0.1%, which is almost nothing. I mean, at this point, they don't seem to be buying or selling as much. But when we look at it on a yearly basis for the past 3 years, we can see that from 2017 to 2018, it was about a 1.2% buyback. Then from 2018 to 2019, it was about a 1.5% buyback. And from 2019 to 2020, it was an average percentage of 0.4, which gives us a yearly average of just under a percent. But I'm going to go ahead and round it up and say that every year, they buy back 1% of their share. I think that's fair. And not to mention, guys, I do want to point out that Mark Zuckerberg or his family is selling a lot of his shares on like a quarterly basis. And that's because they want to give it majority of the charity. I mean, it's a good cause, but that's a lot of selling. I just wanted you guys to know that. So we're going to say from 2021 to 2023 that 1% is going to be the buybacks, and we get all these numbers. 2023 we get 2.8 billion. Earnings per share does follow that as well, as we can see that that's increasing nicely. The forward PE of the peak price of 2020, if that price still stays the same in 2021, we can see the PE ratio gets lower and lower every year, which is a great sign that if the stock is a fair price to buy or not. Looking at it now at the peak price of 2020, looks like $293 or $94 was a great price to buy, because the PE is getting less every year, meaning the price is getting cheaper. And so it's a good time to buy. That's pretty much what it means. Now that we figured out from 2021 to 2023, now we got to figure out the rest of the years up until 2030. And so what I did is that obviously nobody on the website, no one on the internet has this prediction. So we're going to go ahead and figure this out. We can see that from 2021 to 2020, the growth was about 22% and 36% afterwards, and then 17% after that. Net profit is also strong at 34% from 2021 to 2020. That's insane. And then 18% and then 17%. But I need to see more numbers to be sure what to predict the stock from 2024 to 2030. And so what I did is that I went back to 2017 to 2020, and this is what I got. The growth in revenue from 2017 to 2018 was about 37%, and then it was 27% from 2019 to 2018, and then a 22% increase from 2020 to 2019, which averages about 29%, which is not bad, which is really good. And for net profits, we can see that from 2018 to 2017, there was almost a 40% increase, which is absolutely insane. Then there was a 16% decrease the year after that, and that's because they're doing a lot of investments. According to Mark Zuckerberg, it seems to be catching up. They felt it in a quarter where they didn't make much money at all. But that's okay. Internal investments is really good. It's like what Amazon's doing right now. They're investing long term, and the whole stock is going crazy because short term we're not gonna make any money. Guys, this is all long term, nothing to do with short term. If you see dips like this, these are good dips to buy. But anyways, the growth from 2020 to 2019 was a whopping almost 60%, 58% to be exact. I mean, that's just insane, which gives it an average rate of return of 27%. So that's really good. Taking all of these into consideration, we can see the revenue increase from 2017 to 2020 was almost 30%. That's just insane. And we can see the growth that they're predicting from 2021 to 2023 is going to be an average of 25%. I mean, that's just crazy insane. I'm gonna go ahead and be conservative and say 20%. From 2024 to 2030, they're gonna make an average return of 20%. I think that's fair. I think we're being conservative and being safe. For the net profit, we can see that from 2017 to 2020, there was an average increase of 27%, which is quite impressive. The prediction from 2021 to 2023, it's saying an average of 23%. So it seem to be decreasing over time. So I'm gonna go ahead and say 20% again here as well, just to be safe and conservative. I know we're going below the averages, but again, I want to be safe. I want to be conservative. What's crazy is that simply Wall Street is saying that no, on a yearly basis, rate of return of Facebook is about 14 or 15%. So we're going over its prediction, but based off the data that we have here, we're actually going below that. Anyways, I'm pretty confident with these numbers. I feel conservative with these numbers, and I think I can sleep with these numbers. So let's go ahead and plug them in and see what we get up until 2030. So once we plug that all in, we can see that by 2030, we can see the net income is going to be close to $200 billion, which is just absolutely insane. The shares outstanding follows that as well as the EPS. I mean, the EPS is going to be $75 almost. That's just insane. I mean, you already know the stock price is going to be in the moon with this EPS. And obviously the forward PE at a price of 294 is going to be only 4 by 2030. So if ever in the future the stock price of Facebook goes to 300 or below, you know that you should be going all in, because that's what the data tells us, and That's honestly what you should do anyways. I mean, that's just no brainer. Now that's out of the way. We have the entire chart in front of us. Now we have to find out what the Facebook stock price is going to be. Doing that, we need to find the appropriate PE. And to do that, we have to see what the history was with the PE, because usually the PE is a good indicator if you guys should buy or sell a stock. So here we have the PE chart from 2017 to 2021, or the recent quarter, and we can see that recently the PE has been hovering at the highs of 20s. We can see that it's been almost 30, and then 27, and then 25, and then 26 again, and then almost 28. We can see it stabilizing over the years. And I believe that the best PE for Facebook is 29, because it doesn't seem to stay up in the 30s for too long. And so I think 29 is very fair. Let me know if you guys do agree with 29, if that's too high or too low. I want your opinion on this. But let's see what we get when we put 29 PE into the formula. In 2021, the price should be $395 per share, which honestly, it looks like that's what's going to happen at the end of the year. We can see that the price has reached around the 380s. We are only $15 away from that, $20 away from that. So this is very realistic. I can see even this year that it's gonna hit $400 per share. I can see it. So that's pretty darn accurate in my opinion. Then in 2022 is going to be $473, then $561 in 2023, then $680 in 2024, then $824 in 2025. In 2026 we get triple nines, pretty much $1,000 we're gonna hit in 2026, which is not bad, which is pretty nice. 2027 is going to be $1,211. 2028 is going to be close to $1,500. 2029 is going to be close to almost $1,800, and 2030 is going to be close to $2,200 per share, almost reaching a $6 trillion market cap, which is just insane. I mean, that's crazy. But what's even more crazier is that simply Wall Street is saying that even at this price right now, at 380, whatever the price is at the moment, it's undervalued by about 26% or something, which is just absolutely insane. So I did the math, and they're saying that no, the PE ratio should be about 37, which is just insane because Facebook never stayed at 37. But anyways, let's see what their prediction says. I mean, that's just insane, 37 PE. And once we put that into the formula, we get about $2,751 per share by 2030. I mean, that's just insane. Over a $7 trillion market cap. It could be possible if the metaverse comes into play. But again, this is not including the metaverse. That's just insane. That's all I gotta say. But personally, in my opinion, I think my own prediction at like $21.56 per share, I think that's a much more realistic prediction than almost 3,000 per share, because I mean, just look at the chart. Even with this, the compounding effect is insane. But with the 37 PE that Simple Wall Street is saying is even, I mean, just it's even more insane. That's just insane. I know everything's insane right now, but it's just crazy. But at the end of the day, guys, this is a prediction. Anything could happen. Like I said before, 2020, we thought that this is going to be a great year for everybody, but we all know that didn't happen. Companies that are bankrupt now had a great forecast for 2020 and 2021, had a great prediction. They're not here anymore. So we have to be very cautious of how things go, and take this prediction as a grain of salt. Don't rely too much on it. All I'm saying is that invest safe and do your research. More research is always needed. Now, my concern with Facebook is the fact that their platforms, which is Facebook and Instagram, is that, well, they're dead. Although the financials are saying something else, but come on, do you really use Facebook as before and Instagram as before? I don't think so. What's happening now is that Facebook and Instagram are turning more into a business advertising platform more compared to a social media platform. I mean, I can't go through Facebook and Instagram without seeing a whole bunch of ads. It does get annoying. Also, the excitement and the thrilling that you guys used to feel, that I used to feel when posting on these platforms, are no longer there or the same. That excitement and all that fun has shifted to TikTok, which, by the way, Instagram copied, calling it Reels. I mean, it's not only Instagram that's copying, you have other social media platforms as well. But point taken, the fun and excitement that used to post on Facebook and Instagram, it's not the same anymore. And as an investor, what should really trigger me is the fact that Facebook is the king of all social medias. They have the main ones. They have the big dogs, right? They are they have the biggest social media platforms in their own hands. The fact that they allowed TikTok to come up with this idea before them and take the world like this, it's kind of nerve-wracking to me. A company this big and this influence in the world and on social media should not allow a competitor to come this fast, to take space this fast. I mean, I get it. No one really thought about the way how TikTok would work and everything, but I mean, before TikTok, it was Musical.ly. And if Facebook did see that and did make something similar to that or something that's more bigger than that, I'm pretty sure TikTok wouldn't have existed. But that's my only concern. Facebook should be more innovative and not let any other competitors to come up this fast. That's my only thing. Now, should you buy Facebook's nearly $400 stock? Well, Facebook has been killing it with their sales and profits lately, and they don't seem to be stopping anytime soon. They are definitely in the growth period. One point that I would like to strongly point out is that their biggest platform is not generating any money. And I'm talking about WhatsApp. WhatsApp is a bigger platform than Instagram and Facebook. It's been used, everybody's using WhatsApp other than texting on their phone. Some people just forget texting on the phone and they go straight to WhatsApp. And this is not making any money for Facebook, not benefiting financially. And this is huge because if they can find a way to monetize this and make money, they can make even a lot more. I mean, this prediction doesn't even include that. So you can only imagine the numbers. But I do find this to be difficult to monetize. Facebook early on this year did change a few simple policies of WhatsApp and everyone went crazy. The wrong signal price went to the moon, the stock price dropped, Mark Zuckerberg got a lot of hate for it, and it was just an entire mess. But if you were smart, you would have bought the dip if you already had Facebook, but I'm just saying. But now it's September and the change has been implemented and no one is complaining. Like nothing happened. So like what? But if they could find a way to monetize it, their sales and profits is gonna go beyond the moon. And spoiler alert, they already have this in plan. I don't know how they're gonna do it. I don't know what the policy is, but they obviously have this in plan. I mean, you're sitting on gold. Why don't you want to use it, right? So overall, I believe that Facebook is a great long-term investment. Definitely better than a savings account. So going all in, you could, but if you're a safe investor, if you're a good investor, diverse investor, you put some shares into it. I may buy some in the next dip. If you guys are this far in the video, that means you guys have enjoyed it. So go ahead and smash that like button. It'll help me out and help out the channel. I've got other cool videos coming, not just about stocks, but other cool videos coming, investments, all that kind of stuff that you guys would definitely find interesting. And if you guys did find this video interesting, check out this Google stock price. That goes to the moon like crazy. Then we got the Tesla one. And we also got the Apple one as well. These guys, they go to the moon. So you guys will be able to buy them Lambos in the next 5-10 years. And as always, don't forget to subscribe, guys. And I shall see you guys in the next video. See ya.